I'm Corbett Wall with DV Auction, here with your feeder flash for Monday, February the 7th, brought to you in part by Joplin Regional Stockyards. Got a lighter run here for the regular feeder auction on Monday. Not going to be starting until 9:30, which is really late for them. As they're early birds, they like to get started early and get done. But they've only got around 3,000 head that they're expecting. I think it's supposed to be pretty nice here on Monday. They may get a little bit more than that because they've been kind of underestimating here of late, getting a bigger morning run than what they normally do. But in that 3,000 that they know they're going to have, they've got 20 loads of straight yearlings that's going to be on their sale. You can view and bid that auction and all the auctions at Joplin Regional Stockyards on dvauction.com. Get on there if you're interested in seeing that or maybe getting in on those cattle. If you're looking to consign some cattle in the four-state area, Joplin's got all kinds of options there. If you want to hedge your risk by selling out front, you can sure do that with Primetime Livestock Video. They host regular videos, at least every other week when cattle are moving, and got a lot of good demand on there. So check out everything Joplin's got to offer at joplinstockyards.com. Cattle markets climb, and I mean climbed a bunch last week. While all the suits were down in Houston at NCBA convention, I tell you what, guys in the country and in its feedlots and in the sale barns were getting a lot done and gained a lot of ground there. I tell you what, these ag commodities have been really wild here of late. And we've got interest. We know there's going to start cranking it up, and of course your other interest people that loan money out, or the lenders are raising that. In preparation for that. That's changing things. A lot of things are changing. Our inputs are really high. Our inflation is crazy. Our economy's weak. But we're still having trouble, getting a lot of the things that we need, finding people to work, and making sure that there's plenty of beef on those shelves for people to go in and purchase whenever they're ready to do that. But man, they've got this beef so high right now. It's kind of backed off on your cutout values here the last week and a half or so. But man, it really ran up there longer than what we expected it to. But what are the things that caused, your markets to climb so much? A lot of it was that cattle inventory report that come out a week ago Friday. And the more you looked at that report, the more bullish that it got. And I think most everybody's like I am. They feel like the government, USDA, is usually at least 6 months, more like a year and a half behind on the numbers that they put out. We all feel like the numbers are even more lower than what they estimated them to be, and they cranked them down quite a bit, guys. But we've had such severe drought in our major production areas over the last year or so, and it's not getting any better. It hasn't yet. We've sold a lot of cows in the northern plains. We've failed to keep very many heifers back because guys needed the money and just didn't have the extra grass and feed to hold them back. And we fed those heifers, and our heifer slaughter's up big. Our beef cow slaughter is up really big. Our replacement beef cow numbers are down a bunch. And whenever people that give advice to these investors see those kinds of things, that means something to them. Reports like this don't mean anything to them because they're not really familiar with what we're talking about. But when they see numbers like that and they have time to crunch them, they get people involved in the market, and the market was up big. Your CME cattle futures anyway was up big almost every day last week. But we've seen the ability to slaughter cattle has opened back up here in the last week or so. Early this past week we had 120,000 or more, numerous days there, and then just because of weather problems and storms and things, that did back off late in the week, and we ended up having kind of a disappointing total harvest for the week. But it was more due to your weather than anything else, and looking for pretty decent weather this week, so we ought to be cranking it up this week, and that'll be a positive sign. Now we did note, and I'll talk about that more when we get to the fat cattle trade, we didn't finish as strong on our cash trade through the week as what we had in the middle part of the week, and the board was still pretty good, still going up. Well, why is that? Well, we've got a negative basis. These guys that have their fat cattle hedged that they've had on feed are getting tired of these margin calls, and they're taking a beating because they shorted the live cattle market because they were long the cash market, and that's what happens whenever you protect yourself like that. You don't get to hit the home run that you normally would have hit, but you're protected on your downside because you've shorted the market. But when your market's going up, then you have to pay to stay in. Guys were getting tired of that. They were ready to cut the plugs on those cattle that they had market ready and cut those hedges off and get out. And so we saw your market not finish quite as strong, but still much higher market for the week, and we'll talk all about that. We talked probably more than you guys wanted to hear last week about what all went on at NCBA, and they decided to pass a bill that opposes any type of a mandate for minimum negotiated cash trade. Surprise, surprise. But we also saw late in the week by an article that Drovers put out that said that quoted your major senators, Chuck Grassley and Deb Fisher, that put together the compromise bill, and they have not been deterred. In fact, talked to some of them at the very tail end of the week after the vote had already gone down in Houston, and they're more determined now than ever to get this bill passed through. And like I said, that article on Drovers, it was very informative there, said that it quoted Chuck Grassley and Deb Fisher and some other people in the business, and said they feel like it's time, and they've got the support to move this bill on from committee, put it up for debate, and get it voted in. They won't put it up for vote if they don't have the votes. That's the way that kind of thing goes, but they believe that they've got them. The president has endorsed it. His Secretary of Ag has endorsed it. They've got almost everybody on the Senate Ag Committee. So when you get something like that going through your Senate with a lot of ag support and a lot of bilateral support, then it'll go right on through. And man, won't that be a day that we can celebrate when that goes through. Because I've told you many times that we need the government to step in here. It's embarrassing that we have to do it. And most of us are conservative and we don't like to have that. But we need the government to come in and do this for us, for the industry to protect us from ourselves. Because and our industry leaders at the top level are too inbred with the packers, and so that just leaves all of your smaller producers, and there's a lot more of them than there are of the big top guys. But the top guys, of course, they got the gold and they make the golden rule. But this time, I think, to protect the industry itself and protect the consumers and your ranchers and your backgrounders and your cow-calf men and your marketers and everybody in between on both ends, we need to get that compromise bill pushed through. Let's talk about your CME cattle futures. Last week, as we went through the week, your live cattle for February, Monday started out up 87 cents, Tuesday up 72, Wednesday up 82, Thursday up 47, Friday up 45. Never hardly see a day like that where it's up every single day of the week, and ended up with February ending the week at 142.05. That was up $3.35 for the week. Big time gains on the spot market, and we're getting into that month pretty well, and so that's a very positive factor there. April live cattle futures sitting at 146.87 at the end of the week, and that was up 377. Look at next April, a year from April, sitting at 152.55. My gosh, that sounds awfully bold out there, but if a guy was going to feed for that, I think you'd want to dally up to that price, because if you can't make money there, you give way too much for those cattle, and we know that this feed's really high. How about March feeder cattle? Monday was up $3.40 after that inventory report. Tuesday was up 67. Wednesday up 317. Thursday was down 15 cents as grain spiked, but Friday also down 62 with some more profit taken, but still March feeder cattle ended the week at 166.10. That was up $6.48 for the week on your spot feeder cattle contract. April up $6.12 at 171.42. That's based on an 800-pound steer, guys. Your fall contracts on feeder cattle futures are sitting near 188. Wow. Look at your grains, man, are they wild. Corn ended the week at 620.5. It's going to trade in that $6 range here, it looks like, but that was down 15.5 cents a bushel. Beans, a lot to do with South America and not as having as good a crop as what they thought. So beans have really rallied. Your soybeans ended the week with a March contract at 15.53.5. That was up 83.5 cents a bushel for the week. For the last 2 weeks, it's gained $1.4075. Unbelievable. I mean, it hasn't been that many years ago where you wouldn't see $1.40 change in your soybeans, for a whole calendar year, let alone 2 weeks. How about Kansas City hard red winter wheat? 7.85 3/4. That was down 16.5 cents there. But pretty active futures market there. How about your fat cattle trade last week? Up through Thursday, we had 74,800 head. So here's just a tidbit. That's the biggest weekly volume we've had for several weeks here, and maybe all this year. But and it's going to be bigger than that because we did trade some more on Friday. But that's the biggest volume week we've had for quite a while, and we gained ground. You see why we want more negotiated trade. When you have more negotiated trade, you can gain in the markets. And you'd think it'd be the other way around. If they were trading, if the markets were higher, they wouldn't be buying as many cattle. The reason that they're higher is because they're buying more cattle. That's why we want that. We're not sure that if these mandates for minimum negotiated trade pass, if we'll have a better market, but we will have price discovery. We're getting to the point where we're just at the cusp of not having any price discovery. I told you last week that they've estimated that within 4 years, Texas would go to net zero negotiated cash trade. And boy, what's one worth then? Where do you go to find out? But through the week last week, your live sales steers and heifers $1 to $3 higher, from 136 to 142, but mostly 140, even in the southern plains. And your weighted average on live steers up through Thursday, and it won't change a lot from that, for the week is at 139.88. It's about $3 higher. Your dress trade, dress steers and heifers brought from 218 to 224. That's from steady to $6 higher. But your weighted average on dress steers 221.79, and most of them were at 222. That's $3.50 to $4 higher on your weighted average up through Thursday compared to the previous week. On Friday, we had a little bit more cleanup trade, but pretty decent trade for the week. Like I said, Iowa on Friday had 300 head confirmed, 28,600 head for the week. That's a pretty good week for them. Live sales from 138 to 139 on Friday. Nebraska, another 500. They had 30,500 head for the week. That's a good movement for them for a week's time there. And Friday sales, live sales at 140. Didn't have any dress sales on Friday. Kansas sold another 2,700 head, but we're still light for the week, with Kansas only moving 11,300 head for the week last week. With live sales on Friday, mostly 139 with a little bit of 140, where on Wednesday and Thursday they were all 140. So that's what I was talking about. Guys were just wanting to get sold, and they figured, if they lost $1 in the cash market but stopped the bleeding from their hedges, they were better off, so they went ahead and took that. But you look at Texas, they sold another 1,000 on Friday, just short of 9,000 for the week. That's not near enough for them to be robust. but live sales were also a little bit disappointing at 139 because they had also traded at 140 earlier in the week. Box beef cutout values were lower. Your weighted average on all of last week's trades on choice cuts, 284.05. That was down almost $7 compared to the weighted average from the previous week. And your late week quote there Friday afternoon was just under 280, so it was lower than that. So they're still dropping. Select cuts, your weighted average on all of last week, 279.11. That was down $2.95. Your late Friday afternoon sales were just over 276, so lower than that, and it's falling too. But one thing you need to take note, the choice select spread is under $5, $4.94. You know, and they keep saying that all they want is these really high grading cattle. Really? Your choice select spread is less than $5? You know, that they really need them that good and that big? You would think that they could give the market price for some more handy weight cattle and some cattle that may be a little bit plainer. But 565 loads of cuts, grinds, and trimmings for the week last week. Your slaughter, like I said, it started out gangbusters, and the weather and the storms and everything ended up a little weak with only a 46,000 head day on Saturday compared to 57 last week and 69 same week a year ago. But total harvest last week estimated at 639,000. That was 4,000 less than the previous week and 13,000 less than the same week a year ago. We should blow this last week and a year ago away this week, as we should have a very high volume week if we can keep these plants open. And it wasn't due to the COVID or Omicron or none of that. It was just due to slick roads and things like that. But one thing I wanted to tell you about is over the weekend I was up in Quincy, Illinois, attended the Hancock County Cattlemen's Ball. I was invited there by Mike McClellan and met lots and lots of good people there. They had 1,000 people or more than that at this ball, and I tell you what, and we all ate steaks and we all had drinks and we had a good band there and we had good fellowship, and there are lots of Feeder Flash gang members in Western Illinois. I'm here to tell you that, guys. Met a lot of good people. They're excited about the market opportunities. They're excited about the industry. Most of them I talked to are excited about getting this compromise bill done. They were disappointed in Illinois Cattlemen's Association for voting against it, or voting for the mandate, for opposing the mandate, excuse me. That most of them didn't even know that. And there you've got a county cattlemen's association that had a celebration with over 1,000 people there, and their state affiliate there didn't even vote by the way that the majority of them would have liked. But that's kind of the way it goes, guys. And like I said earlier, your big dogs just kind of push things around. But talk about your feeder cattle market for last week. Your real-time index on DV auction, based on an 800-pound steer up through the middle 12 states, ended the week at 160.79. It had been under 160 here for quite a while, but gained $3.05 last week, and that's brought to you by Margin Tracks by Midcon. Let's talk about your trends on your cash feeders, your bigger feeding cattle, heavy calves, and what yearlings we see out there going right into the feedlot. They started the week out kind of unevenly steady, and then by the end of the week we're $3 to $6 higher. And they gained a lot of ground there midweek when we saw the board really jumping there with feeder cattle futures over $3 higher there on Wednesday, but gained a lot of ground. Calves were good all week, even with the big storms coming through. Most of your places, and a lot of them on light receipts, a lot of sales were canceled last week, but calves sold $5 to $10 higher, and spots $12 to $15 higher. And a lot of big gains on those 6-weight calves. And you think, gosh, as high as feed's going to be, how can they do that? Well, look down the line at some of these out front futures. You can hedge those cattle, or you can buy an LRP or do something like that to protect yourself. And if you can put some of them pounds on yourself and save a little money, then that's a good opportunity to make some. But like I said, Winter Livestock and Pratt didn't have a sale on Thursday. OKC West, El Reno, they sold all their cattle on Tuesday, where they usually sell calves Tuesday and yearlings on Wednesday. They moved them up, sold them all on Wednesday, and just a lot of your mid-late week sales there in the plains had really light runs because of that storm that blew through. But look at some top quotes around the circuit late last week. Nevada Livestock Marketing, I wasn't able to be there for that feeder special, but they had a really good sale on Friday. Top sale on some Pee-wee steer calves, 75 head, weighed 406 pounds at $232. Awful good price for way out west. How about Lexington Livestock Market in Lexington, Nebraska? 158 steers, weighed 728 at 184 and a quarter. At the best quote that I saw anywhere late last week or over the weekend, and your National Beef Wire top quote for the day come out of Verdigris Stockyards, Verdigris, Nebraska. 60 head, 638 pound steer calves, bring $194. That's your feeder flash for Monday.